I think basically what I'm looking at in terms of my picks, I've the market, the KLCI. If you look at the KLCI, it has corrected about 15% from the top this year. So in terms of my stock pick, I try to look for stocks that have done even worse than the KLCI, and also because I feel that the market has actually gone up quite a bit in the last month or so. So I will be really identifying these stocks with a view to positioning on weakness. So I have got a mixture of both big cap and small cap. The big cap picks I have, I think the first one is SP Satir. The stock price has come down about 30% or so. I think SP Satir, in terms of you're buying into the management, you're buying into the brand name, and at this stage in time, they are moving out from just pure Klang Valley and Johor developer into Penang, into Vietnam. So I think if you have a longer term horizon, this is probably the top property group to buy in Malaysia. And then the other sort of a bit of contrarian is also I'm looking at the construction sector, because that has been one of the sectors that has been bashed down a lot. And I like IJM. Again, the case of management, I don't think I have to talk very much about the management side. I think in terms of the construction, they have a proven track record both in Malaysia and overseas. They also have exposures to property. I think their property it's just being restructured. There's going to be a capital repayment coming up together with the restructuring. And of course, they also have a bit of plantation. So this stock has also corrected about 30% from the top. So these are my two big cap picks. And in terms of the small mid cap, I like Tan Chong. I think you have some worry about the consumer, how sustainable is the consumer spending. I think in this case, I think Tan Chong is a case, I think it's a value stock to start with. It's trading only about 7-8 times PER. They had two very successful models that are set to almost double earnings this year. But more importantly, I feel that there is a change in the Nissan relationship with Tan Chong that is going to sustain, that is actually going to significantly enhance their long-term earnings profile. So I think this stock at about 8 times PE, trading below book, it offers you quite a decent dividend yield. So that is also on my pick. And the other small cap stock that I like is CBIP. CB Industrial Product, they do the Modi palm oil mill. I'm not really, on the palm oil side, I think the consensus is more or less that palm oil price is going to stay at 2008, 3000, that's sort of sustainable levels. So now it's of course now 3006. I think if you take a longer term view with all these new plantations setting up, I think there is going to be a lot of demand for palm oil mill. And I think this again is a stock that is trading at about 7 times PE. So whether palm oil price will go up to 4,000 is really not an issue with this company. So I really don't know where crude palm oil price will go. I think there is really different school of thoughts. I think on the one hand, the supply side is looking very, very tight. I think there's no doubt about the supply side, but I'm just a little bit more wary because of all the way that corn prices, soybean prices have gone up. I'm just a bit worried that there may be a bit of rethinking of the biofuel policy, even on the European front. So I think CBIP would be a better pick in that sense, or a slightly more defensive pick than getting a pure exposure via plantation stock. And then the last one, which is a quasi oil and gas pick, is Mohiba. Again, these stocks have corrected quite a bit from in the latest correction, and they have proven themselves both in locally and overseas in terms of their execution ability. And they are actually as a group, they are very heavy in oil and gas exposure, both in terms of the parent company and also in terms of their other listed subsidiary, Fairwell Fefco, which is one of the top crane maker for oil and gas, especially for deep sea oil and gas purposes. So that's my 5.
For SP Satir, currently in this season, somehow, is that a contrarian call?
I think it's a bit of, I think both S and SP, I'm not sure whether it's a contrarian call to SM to analyst view, but I think both SP Satir and IJM, you have to take a longer term view into this. I don't think in the short term, you talk about 3-6 months, I don't think this are going to perform. But I think that this, they have both have got proven management, and I think it's a good time. This sort of externally led correction is a good time to gain exposure.
Is Vietnam conceptual at this time for them, yet to be proven kind of.
Oh yeah, I think Vietnam housing market has also come down quite a bit. Yeah, in the recent year or so. But I think it's interesting because if you look at where SB Setia was probably nowhere 10 years ago. I mean, it's practically that. SB Setia, previously, I think if you were to recall 10 years ago, if you talk about top property developer in Malaysia, you won't think of SB Setia. It has come a long way. And with the same management, I think I'm hopeful, I'm confident that they could, they have got better chances of delivery.
Well, for IGM, it's certainly contrary to market performance. So in this sense, it gives you even more value.
Well, which is what I'm saying. So basically, the sort of the guideline is just trying to look for stocks that have underperformed rather than outperform the market in terms of in terms of picking this round.
How has Tan Chong transformed the relationship with Nissan?
I think they actually took a very bold move to build a new plant in Serenda, and I think that was the start of a change in relationship. I think previously, if I think people here may recall that there were a lot of rumors, say 3-5 years back, there were a lot of rumors that Nissan is going to pull out this and that and so on and so forth. But I think with this new plant that they had, which actually was just commissioned not too long ago, I think they have cemented the relationship, which is why you actually saw the launching of new models, and I think there is plan to launch 3 models every year. And I think that the 2 models that they have recently launched have, I think you're all sitting on more than 6 months waiting list at this moment.
Was the Serenda plant intended to produce the ASEAN car for export as well, or is it only for the domestic market?
I think that will probably, I think that will be the eventually, hopefully that, with this new, we have got some rethinking of the motor policy, hopefully with this liberalization and all that, hopefully that could become a reality some point in time. But I think that will be a more longer term thing.
You mean the national auto policy is actually a barrier to this export of ASEAN cars?
I guess it's always a two-way thing, isn't it? So I don't think, I guess you can say that.
For CBIP, I read some reports that there were some concerns over their steel input costs.
Yes.
Is that a problem?
I think that is also the same concern that's also affected a lot of oil and gas stock because of the steel content. So I think that is a valid concern. But then again, I think they have the ability to pass on new contracts, and then of course the share price has corrected so much. I think and you also look at plantation stocks. Typically, plantation stocks today are valued at about 15-20 times PE, and this stock as a proxy to plantation, you are trading at about 7-8 times. So it's a question of valuation as well.
In Muhiba, how did you view their issue of warrants that were not proposed to be offered to shareholders? It'll be privately placed out, right?
Yeah, I understand that should be the case. Yeah.
Is that something that minority shareholders might not like? I mean, generally they wouldn't mind warrants issued cheaply or freely.
I guess they wouldn't mind. I think minority shareholders probably wouldn't like that too much. But at the end of the day, as long as the management can deliver performance, I think that's where the issue of focus should be. I think if you talk about all these warrants, a lot of warrants have died already in this.
Would you have preferred that they actually followed the conventional way and offered it up?
Yeah, sure. But I think it's I feel that it is not such a major issue, to affect our view of the stock.
In the sense that the value of the warrants might not be very much anyway.
I mean, I don't know what the pricing is going to be.